Now we will continue with another panel discussion, and they will discuss and elaborate on the existing hurdles for a digital programmable euro. And at this point, I will hand over to Alex, the chair of the panel.
Thanks a lot, Manuel. Thanks a lot, Philip and team again for having me or having us today. Also, I have to say I'm a big fan of the project Denise has just presented. So also kudos for that. And I think the goal should be for next year to replace me as a moderator with one of your female representatives from your program. So I'm officially offering my seat here for the next round, because we are having this panel already the second time now. It's exactly the same question and exactly the same people. And I do think that this is a very good idea, and I'm sure it will not get boring today. So we are asking again the question, which hurdles do exist for the digital programmable euro before it can go live? Let me maybe quickly hand over to the panelists for a really quick round of introduction. So maybe just the name and the company and what your company is doing. Let me maybe really quickly start. I'm Alex Bechtel. I'm the head of digital asset and currency strategy from Deutsche Bank. So I'm responsible for anything related, strategic questions related to DLT, blockchain, digital assets, and how this concerns the bank. Markus, do you maybe want to go on?
Yes, thanks, Alex. Hey, I'm Markus. I'm a manager with Define. Define is a consultancy company, and there I'm working in the blockchain unit, and I'm helping clients with blockchain projects. So it's mainly about digital assets. It's about custody, but it's also not only in the financial industry, but also another industry like mobility and transportation. So I'm handing over to Radko.
Thank you. Yeah, also very happy to be in this great round again. I'm Radko Albrecht. I'm the founder and CEO of Bitbond. At Bitbond, we're a technology provider focusing primarily on regulated financial institutions such as banks and asset managers. And we deliver our tokenization technology for them so that they can tokenize assets, but also we deliver digital asset custody technology as well as on-chain payments settlement technology, which is probably the most interesting part looking at it from the perspective of the panel today. Thanks, very happy to be here.
Thanks, Radko. So we have two Maximilians here. Let's maybe start with Maximilian Forster.
Well, thanks, Alex. Thanks for being here again. I think a lot has changed since last year. Max is my name. I'm co-founder of Cash and Ledger Technologies, a company who is at the intersection between banking and the industry. Our goal is to have embedded finance and embedded systems working fully automatically, that we actually don't need to have any manual processes being deployed for financial services, and automate rental models such as asset as a service or pay-per-use.
And then, all right, I did a small mistake. So, Max, you have not been here last time, but one of your colleagues was here. So, Bankhaus von der Heid was represented, but not you. So, it would be very grateful to receive a short intro.
No worries about this. So let me give you a short intro. Last year it was Lucas, and this year it's me. Here at Bankhaus von der Heid, I'm responsible for structured finance. I'm doing the Luxembourg securitization transactions, and Radko and I, we've also cooperated quite a lot in all tokenization-related issues. And within the last 2 years, Bankhaus von der Heid, one of the oldest banks in Germany, is now also one of the leading banks applying the blockchain technology. There we are active in the tokenization of assets. We are a fully regulated crypto custodian, and we also enable payments on-chain. But I think that's exactly the right panel today. We have had a technical proof of the payments on-chain, but there are definitely some hurdles which we need to overcome here in the market, and we need to set harmonized standards.
Great, and that's actually a nice transition into our discussion already, Max, because I would also like to begin with you. So today it's about the digital euro, and when people say digital euro, they usually think about central bank digital currencies, I believe. Now, we have learned now that the European Central Bank is probably not issuing any CBDC before the year 2026. Max, you and Bankhaus von der Heid, you already alluded to it in your first statement now, have actually already issued some form of a digital euro. So you have issued a stable coin, and I would really appreciate it if you could give us a short overview of what exactly you did, and maybe share some learnings and maybe an update what has happened since our last panel last year.
Definitely. And I think there is exactly the right constellation that I tell it not only as a blockchain enthusiast, but also as a side of a structured finance professional. What is possible? What is not possible? So what did we do? We issued the UOB stablecoin on a Stellar basis, and we had a technical proof of concept, so that from a technical perspective, we can say that it works. Then, well, that's a technical perspective. Now let's come to a bigger point of view. Let's look at structured finance transactions, where we have also other intermediaries and a secondary market, maybe structured as a bulletin board or something like this. There definitely, and those were the use cases we discussed, there you definitely have some hurdles. Not only the technical hurdle that, yes, there is a Stellar-based digital euro, but what do you do if you have now Ether-based assets? How do you align this? How do you set harmonized standards? And what we also had as a proof of concept for our digital euro, we had one digital euro, what was issued, and this is in a closed environment in our bank. But, well, that works in a small platform. But to be honest, that's not yet the solution for the big platforms, and that's not yet the solution which can be used interchangeable. For example, when you look at what I do at the classical securities in Luxembourg, you issue them a Clearstream, and then you have a central clearing system, and it's cleared delivery versus payment via euros. Well, there's a lot of harmonization which needs to be done by all market players until you reach this status.
All right, thanks a lot. And I think you already raised one or two interesting points where we should go a bit more into depth in our discussion today. I would first maybe hand over to Radko. So Radko, Max just said that the technical perspective works. I think that's good for you to hear that, because as far as I know, you have been the technical partner. So maybe you want to add something on the project.
Yes. So on the technical side, what we have managed to do actually is to automate the minting and burning of stablecoins and connect the minting and burning part with the conventional payments part of the bank, which from a technical perspective is already an exciting project in itself, and is definitely already a good achievement. But on the other hand, of course, the whole setup will even be more interesting and be more fun to deal with once it scales, and once there are several transactions a day, or at some point even a higher transaction frequency. And for that to happen, we need to overcome some of the legal and market-related challenges that Max was just mentioning. So I think looking at it from today, we have solved a lot of technical issues that we encountered at the beginning of the project, and I think it's fair to say that we have pretty much solved them all, because we have tested the stablecoin very thoroughly already, and we have written comprehensive documentation around it and all of that. So that in itself, a relatively big achievement. But then, of course, it will only be an interesting concept if there's a lot of market adoption in terms of transaction volume and transaction frequency. And I think this is the next step that we need to take together between Bankhaus Vonderheit and us, and also a few other banks that are actually looking at a very similar setup, where they would also be interested to become a stablecoin issuer for the purpose of settling securities transactions where these banks are typically acting as an issuer or as an arranger. So I think these are going to be the most interesting, evolutions that we're going to see, particularly in this market over the next 6 to 12 months.
So Radko, allow me maybe.
Yeah, also. Oh, sorry.
No, Max, go ahead.
If it's okay. And I think, Radko, exactly as you said it, in the next 6 or 12 months, I think that the euro stablecoin or the euro on-chain will be of great interest as soon as there are strict regulations for secondary market, or how we can make the transfer of security tokens on-chain. And with the new law on tokenized securities, I think this will also push the need for a euro stablecoin. But because what we need to say, if you just want to purchase a security token, there it's not necessary to have the stablecoin. But if you want to trade security tokens in a secondary market or a bulletin board, this hugely increases the need for stablecoin.
All right, so what I've heard now, we have mentioned some technical hurdles, some interoperability, standardization, and also now legal regulatory hurdles. And I would like to come back to those in a minute. Let me first maybe bring in Markus and Max Forster. And I would actually like to start with another hurdle, which would be the third hurdle I wanted to bring up today. And maybe Max, let's start with you, Max Forster. I know that you're also dealing with a lot of clients. You have also already tokenized a euro, and you're just close to the client base. And one hurdle I usually see in the market is that there is not enough client demand simply for this digital euro. So I just wanted to know from you, from the front, so to say, if you have the same impression and maybe has something changed since we last met last year.
Yes, definitely, Alex. And I think what changed definitely is the pressure from the market. So there is definitely a market pull, but it literally is not literally about the digital euro itself. It's rather about a fit for purpose technology. So it literally is about payment automation. I think that's the big disclaimer, because where we usually see the push is from business models such as asset as a service, equipment as a service, or pay-per-use, however you want to call it. But these business models literally drive drive the large market basic extension and large market demand for embedded finance solutions, as I would call it. And then it literally is a discussion where you need to say okay, how can we basically autonomously build, let's say, a tractor, as we always use the Linden example as we are allowed to. How can you autonomously build a tractor, and how can a tractor basically settle against a bank account? And what is necessary in order for having these steps to have a programmatic execution of the whole payment cycle, meaning billing, invoicing. And on the other hand, obviously also the payment process is coming at a second stage. But then also just what Rutger and Max says, financing is also a huge topic on that issue, because pay-per-use is simply just a shift of a problem. It's not that pay is the significant, big problem in the pay-per-use model, but it's rather the financing and the load on the balance sheet. So it's more about financing solutions as a second step. And for these financing solutions, obviously you need to have a more advanced solutions as we have currently, because you also need adaptations to the law. But coming back to the initial question from you, without going too much into depth on the use case here, is literally, it is a client push, which is currently from the market, but it is from a business side. And it literally always comes with the topic of what is the best technology fitting for the use case you have actually in front of you.
So I think that's a perfect moment where we can bring Markus in here. Markus, I know that you, from a consultant perspective, now have also a good insight into what's going on. You work together with a lot of partners from the industry. So maybe very openly ask to you, can you maybe add something to what Maximilian said? Do you have the impression that something is beginning to move in the industry?
Yes. I mean, definitely, because I can go through some industry where we're working in. So one thing is in the energy sector, you see that they're building kind of a decentralized, say, prosumer networks, because the energy sector is decentralized in a way, because they have decentralized energy sources. And so energy companies trying to build, say, platforms where you can, say, as a prosumer, so it means a consumer and a producer at the same time, can sell you energy. And you're running into this kind of delivery versus payment problem. So for instance, if you have solar energy and you want to get it into the network, you want to be paid for that. And at the moment, things are really kind of complicated, because payment and delivery is completely separated, and they want to bring it onto the same platform. So they need this kind of, say, a digital euro on the same platform where they just, say, orchestrating the energy. So this is one thing. In the security technology industry, we're seeing that there's a growing kind of interest for machine-to-machine payments. So, but we're seeing is that they still have to solve a lot of kind of, I would say, groundwork. So one is data integrity. So you have to get data into their kind of data exchange systems when you have a machine and another machine, and they're exchanging data and payments. You have to solve this problem first. You also have to solve identity issues. And for payments, they're working mainly on, say, wallets. So the machine should have their own wallet and pay another machine. So this is some kind of groundwork which has to be done first, but there's a kind of growing interest. In the financial industry, definitely there's a lot of things going on. So, for instance, like in capital markets, there was recently this German Security Act, this EWPG, and I mean, it sounds really simple. It essentially says, okay, you can issue, say, securities without any kind of paper certificates, but it gives sort of kind of say room for building securities on DLT solutions. And if you really want to leverage here, say, cost savings and everything about digitization, you need something like a cash on ledger here. Because, I mean, if you have a bond, I mean, you have to pay your coupon payments, or if you have like dividend payments, I mean, you don't want to go into these old systems anymore. You want to build it in a shared infrastructure. And also in the financial industry, we see kind of new kind of concepts, especially in trading, where you want to lower the settlement risk. So, for instance, when you have a trade, you often have to pre-fund your trade, and there's now technologies where you just use something like multi-party computation and trying to lock some part of your currency, of your assets, and then you're doing a kind of like a settlement. And here the problem is like at the moment it works mainly with like say cryptocurrencies and maybe something like a stablecoin or like USDT, but if you want to do it in a real, I mean, for say euro pairs, you need something like a digital euro on that. So this is something we are observing in the industry at the moment.
All right, so I understand. I think we agree that we need a digital euro, and I understand that the client demands seems to have picked up over the last months, which is, I believe, a very positive signal. Now, there are two remaining hurdles, which we have already both addressed. One was the technological hurdle, and the other one was the legal hurdle. So let's maybe spend the last 11 minutes on these two hurdles, because I think they are big hurdles. So maybe Ratko, starting with you, and Max Portenlänger has already mentioned it, that when you have a euro that's based on Stellar, as the one from Bankhaus von der Heid, but then you have an asset which sits on Ethereum, the two cannot communicate with each other. And Markus has just mentioned a similar example where you have a platform, and when you want to trigger a payment from this platform, you need the euro on this platform. So this whole topic of interoperability and standardization. So what's your view on this topic? How is this going to play out? Are we going to agree on one super blockchain in the end, or how are we solving this problem?
So my take on this is right now this is more of a theoretical problem, because if we had instances where there's a lot of transaction volume already in one particular stablecoin, and then other organizations, other companies, other banks want to use that, and they have a challenge because they are not able to store tokens on that particular protocol, then you would need to solve an interoperability problem. But I think once you have a sufficient amount of volume, this is relatively easy to solve, because either the issuer will say, well, we're issuing on protocol A, now we see a lot of market demand on protocol B, so we will be issuing our stablecoin on 2 or even 3 or even 4 protocols. And then every time you want to transact on a particular protocol, you would come to the issuer and you would say, well, I have now stablecoins that were issued on Stellar. Please convert them for stablecoins that are issued on Ethereum, as an example. And there will probably be market participants that are going to create something like swaps, where you can simply swap one token for another. So I think the market will solve this problem relatively easily once the demand is there. But what we first need to achieve is that we are in a market where it is a very common scenario for market participants to actually use stablecoins. And the big question right now is whether a digital euro as a stablecoin will be issued by private banks going forward, or whether the central banks, or in particular the European Central Bank, will be fast enough to issue a real CBDC. And probably it's going to take quite a few years still until the European Central Bank will be issuing an actual CBDC that can be used. So I think that there's a chance that 1 or 2 private banks or commercial banks will actually issue a stablecoin and a digital euro that will be used far more. it's in my view, it's a secondary question on which protocol that is happening, because we will see which protocol is going to be the one that is going to be predominant. Again, my take is the interoperability is not as big of a problem as first bringing one digital euro, no matter on which protocol it is being issued, to scale.
Yeah, I think that's a very fair point. Maybe Markus, I would like to ask you. I mean, feel free to add anything to Radko if you like, but then I would also like to ask you the question. You're working a lot together with, I guess, banks and other market participants, and it's from the perspective now of one of your clients. What kind of IT hurdles or challenges do you see in when you implement such a project?
Okay, so this is like twofold. I mean, first thing, you have to introduce a kind of lot of new infrastructure. I mean, if you want to say serve maybe as a payment provider, I mean, it depends what kind of use case you want to serve. But at the end of the day, I mean, you have to introduce a lot of new infrastructure in your systems. And for banks, it's always kind of I would say it's kind of complicated to do so, because I mean, the simple thing is like if you want to add a node to your infrastructure, you have a lot of kind of firewall problems, because I mean you're handling with peer-to-peer communication, and if you have like a public network, I mean you have like a many-to-bank communication, and so this is a kind of challenge for bank. I mean it's really simple. And the other thing is like you always have to build new processes. So, for instance, if you want to have like serve digital assets, and they have like a different kind of life cycle, or they have they operate 24/7. You have to change also your existing kind of infrastructure. You wouldn't build everything new. I mean, you will introduce some kind of new infrastructure, but then you have to connect it with the old infrastructure, and then you have the problem. Okay, everything what already was mentioned earlier have to be end-to-end completely automatized. So, and this is a big problem, because especially in the existing infrastructure, so sometimes you have some kind of manual processes, and this is something you have to change completely. So there's a lot of kind of costs involved here.
So let's maybe then jump to the last hurdle, which was the legal regulatory hurdle. And here I would like to bring in Max Portenlänger again. And Max, I would like to know, when you implemented this Euro stablecoin at Bankhaus von der Heid, what kind of regulatory hurdles did you have to solve in order to get the whole thing going?
Definitely. Well, let's start with this. We are a fully regulated bank sitting here in Germany, and we are happy to have the licenses which are required. We have the e-money license, and that's why we could issue a Euro stablecoin. But then let's come to this point. But when we talked about exactly this topic, how do we make it when we have an asset which is based on the Ether protocol? How can we use our UB stablecoin to purchase an asset based on the Ether stablecoin? Well, let's come now from the technical perspective. Technically, it would work with an atomic swap or a swap. That's okay. But then who issues the Ether stablecoin? And thus the guy who issues the Ether stablecoin also need this e-money license, because usually as you issue e-money, you would need a license. And then those were exactly those legal and regulatory hurdles which we needed to solve. And that's exactly what Radko said. Those are not hurdles which are so difficult to solve in the first instance, but you need to have harmonized standards, and you need to have the right infrastructure, and you have to pre-commit on the right infrastructure so that you do not run exactly into those hurdles. It would not be a problem for us to say, let's tokenize everything on the Stellar blockchain protocol and let's make the DBP on Stellar. Neither would it be a problem to talk and to make it in a cooperation with Radko to issue the stablecoin on an Ether basis. But what makes a problem if you have not pre-committed on the same and harmonized standards? And that's exactly what I want to add to the prior discussion. I think it won't be one or two or three banks who each make a Euro stablecoin, and the one stablecoin will be the right one and the other one will be the wrong one. I think it will be a network of banks, as it is in the current clearing system, which cooperates and wants to cooperate, and only the power of a cooperation and only the power and willing to set harmonized standards for this will enable a framework which works. And that's where we all who are sitting here and all players in the financial market need to play together.
I can only second that call for standardization and working together. Max Foster, maybe another regulatory related question to you. I think Markus has already mentioned machine-to-machine payments and that this might create issues when it comes to current regulation. Now, I know that you with Lindner have exactly such a case where you have a tractor which is supposed to issue a payment. So maybe you can walk us through this and where are kind of the roadblockers when it comes to making payments between machines and current regulation.
Yes. So thanks, Alex. And I think what is definitely noticeable here is it's very practical problems. So it's literally something which you would not think of, which is not even technical feasibility. So I second all of the discussion here. We say it's typically not a technical problem, but it's rather a regulatory and business problem, which we need to solve first because tech is always going to have a solution for that. So going into basically machine-to-machine payments, particularly for Lindner, we run into just simple problems like what is the identity of the asset? So having a tractor, we need to uniquely identify the asset. So we need to uniquely identify the tractor itself in order to basically trigger payments. And as a next step, a tractor cannot own another tractor, nor can a tractor use any actions because it is, according to existing law, a thing. And the thing can't own another thing or can't do any transactions. Meaning that you need to interlink the tractor and the identity of the tractor to the bank account of the actual person who is owning it. Being it a natural or juristical person doesn't really matter, but you need to link it and you need to interlink it. And hence, having a machine-to-machine communication and machine-to-machine payment network would not really work out at the current stage because a machine can't really pay another machine, even though we would actually be able to track what is the amount due. They need to settle between each other and do a netting here. The point is that it's just not legally possible to settle between two machines. Having said that, the only thing we can do at the moment, at the current stage, is having the tractor, and the tractor settles against the bank account from the owner or from the asset owner in that sense, and basically gets kind of payment claims produced by itself based on its data. And I think that's one of the biggest hurdles. And another big hurdle here is literally also a very practical problem is the data stability. As Marcus just outlined, data integrity and stability is one of the major points because what you need there is a stable connection between the tractor and the cloud. Because if you have any failures from data, you always have falsified payments. And that's another step where you need to have a very basic network infrastructure which is working, which is then just basically outlined and giving you the right amounts of data in order to produce bills, and these bills can later on be settled. And then after we fulfill this digital identity topic, we fulfill the topic of how can machines be identified according to existing law. Then we can talk about automation of payments in terms of should we use SEPA systems? Should we rather go for a digital currency? Because ultimately the full case can only fly in that case of pay-per-use if everything is automated as much as possible. And the programmable euro in that sense, with a not rule-bound execution possibility, would be way better because then we enter next stages where you have a tractor. How do you include the insurance company? How can the insurance company basically settle the amounts if a tractor has a blown tire and stuff like this? So there's not rule bound events which happens can only be settled with a digital euro, and hence that can be a possible solution. Having said that, obviously you need to take care of what you have in the market, and request to pay or other options can also be sufficient for the time being, but cannot be the final result of implementation on that basic level of IoT.
So the clock is ticking here. We have only a couple of seconds left for our panel. So let me maybe bring this to an end and first thank the four of you for contributing some of these hurdles and also enlightening us with how we might address them and how we might tackle them and what are the more severe ones and the less severe ones. One of my learnings today was that maybe each individual hurdle or problem or challenge can be addressed, but what's really important is that we kind of as a banking sector and also as an industry work together in order to agree on standardization, on standards, in order that's true for tech, but also for legal. So that was something I'm taking with me today. And so thanks again to the four of you, and then back to Manuel.
Thank you very much. So we have 2 minutes left, I think, and we received one additional question. It is for Radko, and what again? For Radoslav, sorry. Which banks are interested in issuing stablecoins?
So we see demand from rather smaller banks that have an existing focus on one particular type of asset, one particular type of investor, and that would like to internalize the paying agent functionality. Because one thing that when you issue your own digital euro allows you to do is you don't necessarily need to work together with a third-party paying agent anymore, but the participants in a transaction, so the issuer and the investors, can simply hold their assets in a wallet that the bank can provide them with. And these assets then, of course, on the one hand can be like bonds, for example, or equities, but on the other hand can also be the payments leg, so a digital euro. And banks that are, very cost sensitive, that don't like to pay clearstream fees, that don't like to pay fees to paying agents, are typically more interested in issuing their own digital euro in order to make payments more efficient than larger banks. I can't name any names, of course, when it's not yet public, but in general, it's fair to say that banks that are relatively focused on specific areas and that are smaller in terms of number of customers are more interested in it.
Okay, yeah, thank you. And thank you very much to all panelists. And Alex, of course, you are right at the beginning, so it wasn't boring at all. So thank you all for sharing your insights. And maybe you can spot some other questions in our Telegram channel.